Now we come to a speaker who has a particularly big challenge, given the remarks of his head of state this morning. But he's very well positioned because Sunil has been a leader, not just in Mauritius in the stock exchange as its head, but throughout the continent in building partnerships and relationships. It's called the Association of African Stock Exchanges. So I have a particular set of questions for Sunil. Very quickly, what do you feel is the current infrastructure funding gap in Africa, and how is it affecting the economies? How can African capital markets, like the Stock Exchange of Mauritius, facilitate investments in African infrastructure projects? Foreign exchange, we know that's absolutely critical for cross-border investment. What instruments do you think exist in Mauritius and could be used throughout capital markets in Africa? And given the foundations Mauritius has as a very strong financial center, how can you foster higher immediate investment in Africa's infrastructure? Sunil.
Thank you, Barbara, and thanks to Hubert for inviting me to be part of this panel. Well, you asked me questions. If I answer all these questions, take me about 1 hour. So I'll try to be brief and get to the essence of the issues that you raised with me. So funding gap, I think you've already mentioned that. It's very clear that today Africa has a funding gap varying between 100 to 130 billion dollars on an annual basis, which means that during the next 10 years, Africa needs to look for 1 to 1.3 trillion US dollars so as to really put those economies on the track to get to potential GDP. And it's very clear that without this kind of funding, this is going to cost Africa anything between 2 to 4% of GDP. So what does that mean? It means that on an annual basis, there is about 40 to 80 billion dollars of wealth creation that is not coming through the continent. So I think all the other speakers have talked about what are the problems that should be tackled before Africa can really attract. And I think for me, you asked me what exchanges and what capital markets can do. I think capital markets can certainly bring their contribution, but first and foremost, I think there are certain problems that need to be tackled, up front. And this has been mentioned. I think to make capital markets work for funding, you need to have those products that are structured, which would make those products palatable and attractive for those investors that you're asking to put money in. I think all the other previous speakers that have talked have mentioned, a number of problems that would currently prevent institutional investors from looking at these infrastructure projects. And I would like to just mention a few figures to highlight the extent of the difficulty that we are facing. I think there is about 350 billion US dollars of pension fund money that is today assets under management throughout Africa, and how much of that is currently invested in infrastructure projects. It's only 1.5%. So it shows that there's only about, out of 350 billion dollars under management, only about 4 to 5 billion are currently invested. So there is definitely a huge potential for channeling more of that money into infrastructure projects, but for pension funds and other institutional investors to do that, there is a fundamental need to make those infrastructure projects palatable and attractive from their fiduciary responsibilities standpoint. Otherwise they won't. I mean, an infrastructure project, let's say, has a lifetime of 10 years. During, let's say, the first 3 or 4 years, there is no return on that. And it's only once the project has reached a certain stage of development that so most of the pension funds and most of the institutional investors that invest, have very clear guidelines, investment guidelines that would allow them to invest in such and such project. So I think the key challenge is how, I'm not saying that infrastructure projects are not attractive. I think they can be very attractive. There are some great examples of great returns that have been obtained. But how do you make those projects, structure them in a way which would entice maybe those pension funds and institutional investors to take the upfront risk and then invest in those. I think that's the first thing. Now, when you look at the results of the survey, it shows that there are a number of other risks that need to be addressed before investors really look at very seriously at infrastructure projects. There is political risk, there is currency risk, because if you're investing, let's say I was looking at statistics on African currencies against US dollar, they've been extremely volatile post the commodities crisis. Extremely. I was looking at the Ghanaian CD, I think it's been on average fluctuating between 15 to 20% against the US dollar year on year for the last 5 years. Same thing about the Zambian kwacha or the Kenyan shilling. So there's definitely a need to look at how to address those currency risks. And then there is thirdly the liquidity risk. When people invest in an infrastructure project, it's always very interesting for them to see whether, if they want, to capitalize on their investments, whether there is an exit mechanism somewhere. So that's where I think first you should structure those projects to make them palatable and attractive. Secondly, address currency risk and liquidity risk, and that's where capital markets, I think, can bring. You were asking me the question about capital markets. I think currency risk, today, if you look around Africa, there is no real organized market for, hedging currency risk. It's done in an OTC type of mechanism with banks and so on, but that's very costly. So how do we put our heads together? I think this should be driven by governments and policymakers and DFIs like ADB. How do we go and create an organized market where investors in Africa, be it in infrastructure projects or other types of projects, could hedge their currency risk? I think that's very important. Maybe through an exchange that would offer futures contracts on different, maybe start with those currencies where there's a lot of activity, Nigeria, Kenya, choose 3 or 4 countries which are really very important economically, and where a number of projects are being run, and try to see whether it's doable. And if that's done, then this will bring us to the next idea, where these infrastructure projects that are well structured could be traded on exchanges like infrastructure funds, or very specific project bonds could be traded. And your last question about Mauritius, I think, as our acting president has already mentioned, I think Mauritius is ideally positioned to be the structuring place for investments into Africa, and there are a number of reasons. We have signed IPPAs. One of the key issues that was raised in the survey is political risk. And by signing IPPAs, investment promotion and protection agreements, with I don't know how many countries, maybe 20 plus, including those important countries, it gives the foreign investor, the institutional investor, the comfort that you can go and invest in a particular project in a country with which Mauritius has signed this IPPA. It gives this additional comfort. Secondly, we have a number of double taxation treaties which makes a structuring of investment vehicles from Mauritius very compelling and very attractive to those investors. So leveraging on these two, I think Mauritius definitely can be used for fostering higher investment projects into Africa. And then one important thing, when looking at funding, it was mentioned that there is about $650 billion of assets under management that are hosted in Mauritius. I'm not saying that all these 650 billion would be available for infrastructure projects, But let's, for argument's sake, that if all these issues that have been raised are addressed, we may say 10% of that could be potentially available. So that's a lot of money that is available potentially. But I join all the other panel members. We need to put our focus on how to structure these projects in a way which helps to address all these risks that you've very concretely highlighted in your survey. If we do that, I think the potential can be great.
Sunil, you do not disappoint, but now you're in trouble. You have been a leader, and your country has been a leader. You've put forward 2 practical sets of actions. One on the foreign exchange, and I remember once you telling me about you have certain listings that are denominated in foreign currency. Is that correct?
Yeah.
So that's also something to play with, the residual risk of who's going to take. For example, you could have a risk mitigation instrument, dare I suggest MEGA or some other, or we could talk to Gorenko or whomever to hedge that. But there is this room for innovation. So I wonder if you would like to take forward both how the, starting with Mauritius, its leadership role in looking at the FX risk, but also that very captivating, in Wall Street, in the old days, in emerging markets, of course, it were the financial institution, the banks used to invest. And when we wanted to unload the portfolios, where did we go? We went to our private bank and those clients to take on those assets and create a secondary market. So I think your second idea is brilliant too. Are you willing to push forward on that?
Yeah. Well, on the multi-currency platform that we have at the stock exchange, so let me give you a description of why we went ahead with this and how it is helping to address, I would say partially, the currency risk associated with underlying business in Africa. So basically, a few years ago, we realized that if we want to leverage on the attractiveness of Mauritius as a platform or as a hub for investments into India or into Africa, as a stock exchange, we needed to leverage on that. So one thing that we did was we are the first and only exchange in Africa today that would allow an issuer to list a product, trade a product, and settle the underlying transactions in that product, in that financial product, in US dollar, in euro, in GBP, in South African rand, and of course, Mauritian rupee. And the reason why we did that is because we felt that there was, on the one hand, in what we call the global business sector in Mauritius, a number of companies that are structured and that are investing either in Africa or in India or other emerging regions of the world. And on the other hand, you have those $650 billion of assets under management that are structured in Mauritius. So we felt that as an exchange, we sit in the middle. If we could link those that are needing money, that is those global business companies, with those that have the money, and we offer an organized, regulated market infrastructure that would allow those that have the money to invest in good projects and fund those that are in need of money and provide those investors with an exit, a liquidity platform. So the only way to do that was to have a multi-currency capital raising, listing, trading, and settlement platform. So we went ahead and did that. And this has worked wonderfully well because over the last 5 years, most of the new listings that we've had at the level of the stock exchange of Mauritius have been non-domestic. That is, products that are, where the funders are all around the world, the issuers are coming from different parts of the world, but they use Mauritius as a platform for the obvious reasons that were highlighted. So how can that be replicated for the infrastructure projects? I think yes, it can definitely be, but notwithstanding the fact that we need to address those other issues that I mentioned. When we have a multi-currency platform, it makes the investments for the investor in the underlying investment more attractive from a trading perspective. So let's say you want to invest in a company that is doing business in Africa. The company raises the money in dollars. You are an international investor. You look at the prospects of growth of this underlying company and you find that it's great. So you decide to invest. You invest in dollars, the money is used and invested in an African country, and we offer the trading side of things where you don't need to convert your dollar into the local currency, invest in the underlying business, and then when you sell, you need to reconvert your underlying currency in dollars and then repatriate the money. So you have a lot of costs that are implicated. So our multi-currency platform helps to address those unnecessary costs and make the investments more attractive. But this being said, the underlying currency risk of the country in which you are investing still is there. So that's where, how do you address that? You need to look at coming up with an organized market for trading, derivatives contracts on those underlying currencies, which would then help you to address the underlying risk. We provide a platform for tackling the trading side of the risk, which we eliminate, but underlying business risk or the underlying revenue risk is still there. So we need to, come up with a solution on that.
No, but Sunil, thank you, because when we think, what are the roles of governments and development partners, and we need to have intermediaries to be able to facilitate the flows, that's exactly the discussion we ought to be having.
Doing business in Africa, you can't afford to be without Africa Investor.